How taxes are handled in the cryptocurrency market. Taxes related to cryptocurrencies can vary significantly by jurisdiction and local tax laws. It is important to note that the information provided here is general and does not replace advice from a tax professional. It is always recommended to consult an accountant or tax lawyer for personalized advice. Capital gains. Many countries treat capital gains from cryptocurrency transactions as taxable income. Capital gains can be classified as short-term, holding assets for less than 1 year, or long-term, holding for more than 1 year, and tax rates can vary depending on this classification. Buying and selling cryptocurrencies. Buying and selling cryptocurrencies can generate capital gains or losses depending on the purchase and sale price. Active traders may face additional requirements, such as taxing their profits as ordinary income. Cryptocurrency mining. Cryptocurrency mining can be considered a taxable activity, with the appreciation in value of mined assets being treated as income. Costs associated with mining, such as hardware and electricity, may be deductible in some cases. Receiving payments in cryptocurrencies. Receiving wages or payments in cryptocurrencies can be treated as income and is subject to income taxes. The taxable value may be based on the market value at the time of receipt. Forks and airdrops. Gains resulting from forks, splits of the blockchain, or airdrops, free distribution of tokens, may be taxable, and the amount to be taxed may be determined by the market value at the time of receipt. Reporting and compliance. In many jurisdictions, taxpayers are required to report their cryptocurrency transactions and calculate capital gains or losses. Failure to report cryptocurrency transactions can result in tax penalties. Constantly changing legislation. Laws related to cryptocurrencies are constantly evolving, and it is essential to stay up to date with changes in tax legislation. International compliance. For those operating internationally, tax laws can vary significantly between countries, which can complicate tax compliance. Detailed records. Keeping detailed records of all transactions, including dates, amounts in fiat currency and cryptocurrencies, is crucial to facilitate tax compliance. Please remember that the above information is general and may not cover all possible situations. Consulting a tax professional is highly recommended to address issues specific to your tax situation. Thank you, guys.